Mary had a little lounge sleep, right? I hope that's okay. I've got a problem with my um, microphone this morning, so hopefully that's okay. The microphone's closer to me now. Welcome to the proptrade.com. Very, very exciting day. We've launched MT5, a product. If you don't know what MT5 is, go and check out our Discord group. Go and check it out. Get a new account from as little as a few dollars, and you've got the opportunity to trade with the most stable and most popular trading package that's been around for well over 20 years now. MT3, MT4, and now MT5. Great product from MetaQuote. Lots and lots of brokers, standard product, and we now offer it on our website. So get to the website. Have a crack at opening an account and give it a go. MT5 is a great product. I've used it for years, but still by far my favorite. Trading View and Trade Locker, don't get me wrong, I really like those as well. But certainly MT5's been around a long time. Lots of free EAs, if that's your bag, available. Paid EAs, as well. I'm actually sitting down today. I'm normally stood up when I do these, but it's going to be quite a long session today. I like standing up simply because my diaphragm moves up and down much more easily when you stood up. But anyway, sat down today because it's going to be quite a long session. I was getting quite tired the other day, so let's just make sure that that's still gets the room in properly. I'll fiddle with the camera and I've fiddled with the. There we are. I'll just have to keep my head down a bit there. So sterling very much in focus today. Bank of England expected to keep rates unchanged, and also the key thing which we saw. Let's bring the camera up. The key thing is for me really is the split in the vote. Yesterday's services PMIs did actually come out, and we got that ADP, that private payrolls out of the United States, with that big miss. We had the continued sell-off in tech stocks yesterday. The Nasdaq was off another 1.5% yesterday. The Dow was up. Actually, got this disparity we've been talking about. Is this rotation in positions? Many people have been talking about for a while now. Looks like that might be coming to fruition. Obviously, we had the pharmaceutical companies reporting yesterday, the day before, and yesterday Pfizer and Merck reported after hours on Tuesday night, and Eli Lilly reported during the day yesterday. They were up 10% at one point yesterday. Google reported last night as well. Amazon tonight. So Alphabet shares closed down, have not moved much in pre-market. The S&P was down 0.5% yesterday, 6,882. Sterling is under pressure today, and I say the key thing, 7 minutes time you can see this, for me really is this vote, and what if we've got much more of a unified MPC. Can you see that 2.7 is the vote expectation today? Last time we were 5.4, so big split, 3.75%. Still top end of the see here that Sterling up until this week was top of the shop with the United States at 3.75, 3.85 now from that raise we saw from the RBA overnight on Tuesday. I'm not going to say a surprise, not a surprise. Pressure on the ECB potentially this year as well to kick up rates. RBNZ also potentially moving higher. So obviously mantra to move lower. So disparity between the central banks, obviously massive pressure on the Bank of Japan as well. But see what the election looks like on Sunday, but more on that later in the week. Today's attention is all around the Bank of England, and the later on this afternoon, in an hour or so, the ECB claims are probably going to come out. Actually, oh, hang on, Jolts is saying they're getting reported later on as well. Let me just check that. The release due over 2 days due to the government shutdown. Right, so we are getting our Jolts data today. Remember that it's important because of the vacancies have been declining, as we saw earlier in the week. So that's happening. But it doesn't look like non-farm payrolls are not happening. Trump's scheduled for a speech at 12 o'clock our time. It's quite early in the US. due to speak at the White House in Washington. Whether it's one of his rambling press conferences to the bent over press or not, I don't know. And we'll see what happens tomorrow. So that could be quite interesting. Watch that tomorrow. We're scheduled for 1:15 for the sorry, you're down here now, aren't you? For the non-farm payroll tomorrow, but that's not happening. So we've still got Canadian jobs. So we'll leave that at 1:15. I'll be monitoring obviously what Trump's got to say today. Today could be quite really interesting. Now we've got the claims, which is obviously still scheduled to come out actually on time. So that's due at normal time, and then we got the jobs later on this afternoon after the RBA. Sorry, after the ECB and the Bank of England this morning. So, and then interesting, comments from the head of the Bank of Canada and RBA's Ms. Bullock later on tonight as well, following that move up from the RBA. So, see if she gets a question on that as well. So, job opening, and this is, let me see what this is. The text of the speech is due to release time. This is the speech is scheduled 15 minutes late. Okay. So the text comes out before, so 5:15, I think, on the speech, or quarter to. Anyway, I think that must be when the speech is coming out. So watch that if you're CAD traders later. So let's just get back to the let's go back to the charts. So sterling has been moving down this week on the stronger dollar, rejecting 138 at the end of last week, the end of January, and moving now. Come down to the 1 hour chart today, moving down. We've pushed a low this morning at 135.56, and we bounced in the last couple of hours. So short term, this will be I've triggered a long position here. There we got 10 o'clock, target one. We've probably got stopped out actually. The stop loss would have been up here. We got stopped out there, but we've gone and then crossed as we've moved down. Then we've crossed again in line with the upside. So target, a few pips there ahead of the date, and I'd have been out now. Just waiting. This is bounced to 136. So we've recovered 136. I'll just put 136 on there. I'll put it on as a line ahead of what Bank of England goes. So there's 136 there. 136. Nice big fat round number, and just bringing that in. We actually got some skin in the game still for sterling. This is from the other night. The pound Aussie hit our target this morning. Been out of the money. Let's take it up to the we count. We got in as I said on. There was some trades last night, but I was out and I didn't actually record for you here. So this was out of the money quite significantly yesterday, but we eventually hit target. Our stop loss is up here somewhere on the time frame. Hit target this morning. We closed 50% of it out. I nearly closed all of it. Closed the other bit as well. But in the end, I left it, and you can see bouncing back up sterling, picking up. The T2 was this wick we got from yesterday, low at 194.28, 194.6. So let's just go back to still 2 minutes to go before the news breaks. As I say, no real surprises expected from the Bank of England later on, or anything really from. I'd be interested to hear what his comments are about the situation in the inflation front. Again, there's some green shoots of growth in the UK, but obviously the politics. I'm saying obviously what we don't know, but the Epstein files have rattled right through the UK politics. Lord Mandelson, giving up his lordship, and the Prime Minister, who's already under lots of pressure, Keir Starmer, coming under lots of pressure from his own backbenchers as well, over what he knew and didn't know, and his judgment. Remember, top lawyer in the UK at one point, Sir Keir Starmer, his judgment on reappointing Mandelson to a key position, the ambassador of the United States, when he was still in touch with Epstein, even after that 2008 conviction. If beggars believe some of these people that are have been consumed by power and finances as well. But greed, no doubt, and power. Anyway. So that's still open. I'll pull the stop loss actually down to entry there. There we are. Stop loss is right on entry. So 25 pips have been taken off, and if we get stopped out here on the news, so be it. That's it. Better judge to take the whole 50 pips, but see what happens on the day. So let's just go back to the cable 5 minute chart. So that's long. So it had been out now. Let's see how the news drops. So that's just coming now. We just got to 12 o'clock, top of the shop, and as expected, no change from the Bank of England. It's just dropping now for 375. March is the next two, 4.4 inflation. So it's nearly, it's ticking up. It's ticking up. That's not good news. And there we go. We should lift that sterling weakness with the from the February decision. So sterling's weakened on that, leaving inflation rates at 4.75. Let's have a look. Interesting. Rate cut vote. A big surprise on the rate cut. This is what I was looking at. So we've got 1, 2, 3, 4 looking for a cut. So Ramsden, Taylor, Dringer, and Breeden now looking for a cut. So 5 for the bank rate expectation. So 4 members of the 9 were looking for a cut for sterling. So looks like that's coming, hence the movement down here. We saw for cable, so sterling weaker on that. It would have helped where's our Aussie trade. So there we go. It's hit target 2. So that's out and closed completely. So we've hit target 2 on that news. So that's some more pips in the bag for our Aussie short. So target 2 is out. That whole trade is now closed. But let's just go back to sterling here on on the news that 4 members of the Bank of England Monetary Committee, Breeden, Dringer, not on Ransom, they were there, and Megan Taylor as well as voted for a 25 basis point cut to get the economy going. It was expected that would a bit more in line, as I wrote on the Discord group just before we came live. It was expected. Where was it? Yeah. Yeah, that's there we go. No change price and a relatively united vote expected. Let's see what happens. So it's not actually. It's like it was last time. 5-4 split on the announcement. Let me just get to the website, see what else is going on. All this more or less should be scope for some further reduction in the bank rate this year is a key line I've picked out here. Judgments around further policy easing will become a closer call. If the economy continues to improve, but this does not mean that there is expectation to cut the bank rate at any particular meeting. Is what it reads there. Let me just find the statement. The current bank rate at the meeting on the 4th of February, 5-4, although 2% CPI. For developments in energy pricing, including from the budget of 2025, reflecting the impact of monetary policy consistent with evidence of subdued economic monetary policy set to ensure that inflation not only reaches 2% but remains sustainably at that level. So there we go. The restrictiveness as policy has fallen as bank rate has been reduced by 150 basis points since last summer of 2024. Current evidence the bank rate is likely to be reduced further. That's the key thing that weakens sterling. Judgments around further easing policy will become a closer call. The extent and timing of further easing in monetary policy will depend on the evolution of the outlook for inflation. Okay, also got the minutes coming out. The minutes used to be 2 weeks after. It's all come out together. Inflation had fallen from 3.8% in September last year to 3.4% in December, reflecting the impact of our monetary policy. Wage growth and services price inflation generally continue to ease. So it's not disinflation, but it's easing. This may reflect developments. Do you want? Does anybody want to call you? Let me download a couple of that. I can download it. Yeah, I'll send you the. Anybody wants it? There's the link. I'll stick it on our Discord group, guys. There it is. Anybody's interested? That's the notes from me, but we'll keep going here. Oh, sorry, I was reading it for you, wasn't I? Our members committee stressed the importance of inflation reaching 2%. But, members are also pointing to pay settlements, and the agents' pay service slowing to 3.4%. So that's interesting. So earnings have been a bit ahead of themselves at 5 and a bit percent. Talking about a 3.4% for the year here. So that's come down somewhat. Extent to which remaining excessive domestic inflationary pressure would fall, crucially also very influenced by developments in the labour market and the degree to which economic slack act against these pressures. Okay, the labour market has continued to loosen, with the unemployment rate having picked up to 5% recently. So most members judge that there was remain some downside risk to this already weaker outlook, which could widen the output gap further and result in an undershoot in inflation. The absence of loose monetary policy. That's the floor vote. Households remain cautious about spending. We've seen that in the shops. The risk that savings would not fall back as expected. Demand could remain weak and unemployment could increase more than expected. Okay, so 4 of them have taken to look to cut rates. On balance, the committee judged that the risk from greater inflation persistence had continued to become less pronounced. Okay, so that's a key phrase as well. Persistence in continued inflation has become less pronounced. Some risks to inflation from weaker demand and loosening. Nothing here about tariffs here at the moment about the US, because the tariff thing for the UK doesn't because it's more or less in balance with its trade to and from the United States. Across possible inflation scenarios, the MPC considered how well different money policies could. Okay, that's not going to move the market. Some members were concerned that cutting rates too quickly risked inadvertently making policy too accommodative if inflationary policies did not recede. Okay, so on balance, they've decided that they are receding, but 5 remain that it is still of an issue. So this persistence about inflation, that wording has shifted a bit. Finding clear evidence that structural changes that occurred in the economy would always take a long time to become evident in this data, obviously, and waiting too long to change policy in the meantime could cost them sharper downturn inactivity and a significant undershoot in inflation. Okay. The committee noted that central projection was conditioned on a market curve that fell slightly in 2020. That fell slightly in 2026 and sloped upwards thereafter to around 3 3/4 in 2029. Instead, the median respondent to the market participant survey expected the bank rate to fall to 5.25, so from 5.75 to 5.25, and stay there. Members recognise that the upward slope in market pricing beyond this year, even if it don't solely. Okay, so still leaving to meet inflation at 2%. 5 members: Bailey, Green, Lombardelli, Mann, and Pill preferred to maintain rates at 3.75, and we just mentioned the 4 that wanted to cut. It wasn't Megan Green, sorry, Megan. For the 3 members in the group, Green, Lombardelli, and a more prolonged period of policy restriction was likely to be warranted to mitigate the remaining risks. So, head economist Hugh Pill, Megan Green, the American lady, and Lombardelli, long been looking to keep the things. The 2 other members of this group, Bailey and Mann, had greater confidence that this risk would be mitigated by the lower-term path for inflation, and placed greater emphasis on the risks to inflation from weaker activity, but neither member judged that the weight of evidence was sufficient to warrant reducing rates at this point. Sarah Breeden, Dingler, Branson, and Taylor wanted to cut rates at this point. These members judged that the risk from greater inflation persistence had receded materially. Okay, inflation. So let me just read that again. These members judge that the risks from greater inflation persistence had receded materially. So there's four of them in this group now, as there was last time. We were expecting a 2-7 vote here. They wanted to go for a cut of 25 basis points. It would normalise once inflation. It would certainly see some relief to potentially mortgage rates. We cut rates and also money low. UK food production as well, because that food inflation is still relatively sticky. Five voted to keep things where they were, and the four voted for a cut to 3.5%. Okay, so that's the rounded members, and there's notes here from what they've thought. Accumulating evidence Bailey talks about from the supply side, and there's more weight on the risk of inflation, says Megan Green. Lombardelli data continued to broadly show strength in wages and underlying inflation. Catherine Mann, new analysis and current developments have moved in the appropriate time for a cut, so she's quite adamant about a cut. I do not see the need to reduce further at this meeting, says Hugh Hill, chief economist. Distinguishing between the underlying disinflationary process remains intact but incomplete. Okay, interesting. There we go. Okay, I won't read everybody's out, but interesting. They've obviously had a healthy discussion, which is always good. And the upshot, as we can see here, is weaker sterling. So the cable rate this morning has dipped to 135.50. Tested that key. Well, it went under that 135.48, but tested into the key low, previous low of the day at 135.58. We've gone lower, so 135.50 remains a key support area here on the short term, but it's short, and there we go. You can see here on our mean reverting strategy, there's the 12 o'clock, there's 12:05, so you could have added to your, it's confirmation here. You can see that. So that strategy, trading with on our platform with the 5-minute restriction around big news, he's still short from here. Let's just put this in and see how that goes. If you're a news trader, want to trade the volatility of the news, it's always quite risky. But here on the 5-minute chart, there's the 5 minutes up. You got short there at 135.67, 135.66.7, and let's see how that moves down. Stop loss really are at top of the turn, but if you want to be tight, just shy of the key 135 area there. Big risk. Or you stick it there at the 20 period even average 135.93. So let's stick it there and see if we continue to milk lower just on the short term reaction to the news. Obviously, the higher time frames telling us. Obviously, we would have had all that set up. So we go up the higher time frames. So we, you've got 30 minutes to start off with. So that's in line. Our stop loss is above 135 here on the 35 minute, but we have bummed into bound down to a very recent. If we scroll in, we haven't been down at this level here on our half an hour chart. We have to look all the way over here. This was on a rally, up an unbroken rally through 130 to 130 through 136, I should say, from the end of the close of trading on close of the stock markets here on the 23rd of January. So it's sterling weakening on that expectation. So it's 35, and the hourly, up to the hourly chart. Where's the hourly? Well, there isn't any, is there? We've got a strong run here as we burst through 135 to 136. So see how our short plays out. That's our entry there. We're out of the money at the moment on the short term, but there's a lot of it's a free run up, so it could be a free run down as well. First stop really on the hourly chart is where we've been to this morning. Can you see that, guys? Sorry. Just reassess that. No, it's not going to do that because it's such a way. So then we go up to the 4-hour chart, which is candles. Clear. So there's that big candle following us through on the 23rd. So support on the 4-hour candles here is just above the key 135 over 135.25. So that could be a downside target today, 135.25, or just above that if you want to be safe, 135.36. So that's a potential target zone for the higher time frames. down there. It's got this sort of zone here. See, it's a bit of a leg on your feet if it's way out. That's a sort of target area. Not red, but make it orange. Actually, let's make it blue. That's not, we can't see that one. Oh, not blue. Okay. So that'll be a target for later on today. If this trend continues, you can see it is here. The last 4 hour candle was a big doofer down this morning from 6 till 10. We're in the middle of the 10 till 2 one at the moment. So, but certainly on our short term basis, it's enough to go short, and we're just about in the money now. So see where we go. Will we get to that level or not? We shall see. But there we go. Sterling shorter on the surprise. Let me just bring up the where's mine? Yeah, there it is. Bring up the calendar and just refresh this as well. So big surprise, 4-5. That 4-5 vote from the 2-7. A bit of a flip from last time, but it's still showing quite a division within the MPC. I'm quite, I like it's healthy, it's good. It's really now how Bailey plays the press conference in 15 minutes, but gives us a chance to go and have another look. What else is going on? We got our stop loss set, we got our target set, and then we can leave our short sterling positions in play at the moment. So futures are up. Oh no, it was yesterday's close, was it? No, futures. Yes, that was yesterday's close. I'm looking at now. Sorry, on the Bloomberg YouTube channel here. It's not the terminal. I've got a Bloomberg terminal. Bloomberg terminal. I don't really need a Bloomberg terminal, to be honest. But anyway, anything else? Anybody else has pulled out? I'm just going to gradual downward path, reduce further. He's tipped it back, basically, hasn't he? The idea of moving near future. 1 year's inflation is 1.7%, leaves 2.5. Yeah, it's nothing no new. Convergence and views towards cutting bank further view. Yeah, because we've got close up. We're going to the 36% chance of breakup. First full rate cut coming in July. Okay, that might. Okay, so I'm just looking at futures on the money markets for sterling, and we now have 50 basis points cut by year, and with April being seen as the next timeline for a rate cut, so not March, but the April rate cut, and that was quite a significant, over 0.5% move for sterling. So overall today, sterling is one of our weaker currencies. Yeah, we are down across the board here. We're down 50.53 of 1%. Sterling today. Our biggest mover is the euro, benefiting up 0.5%. So across its main rivals, sterling is down 0.55%, and euro pound is up 0.51% at 86.93 last time I looked up here. So there we go. So I said ECB to come, but before that we've got Bailey's press conference filling the gap between 12:30 and 1:15. So we'll be back later for that. But let's have a look at the rest of the markets. We've had another move on Bitcoin, and those of you that are holding, I'm sure you're probably aware it hasn't been good news. So let's just go start at the top with crypto and let's look at Bitcoin, guys. If there's any other Bitcoin, I only ever talk about Bitcoin on the crypto market, but if there's any other um, uh, um, crypto that you're trading or holding, or what my opinion on. Obviously, I concentrate on Bitcoin, so I don't trade it particularly, but this move has been significant. And the significance of this morning is we are under 70. We are under 70 for the first time in a long time. So again, it's worth a little line on a big fat line on my chart, because it's an area that it's been targeted three levels we had. But there we are, 70,000 a Bitcoin. And I mean, if you bought it at 10,000 or 15,000, you're still very, very happy. But if you bought it at 25,000, you still hold it. You'd be getting a bit squeamish now, I guess, if you managed to beat yourself and managed to hang on to it. So let me just put that in. Bear with me a second. I'm going to do this on 0, 0. Now, unfortunately, getting it on my MT, so it's 17k. Stick it right in there. So there we are, 70,000 breached in the last hour. And if we go up the time frames, is the 5 minute. Well, in fact, the last 5 minutes is let me share that. And stick it on my WhatsApp group. So big move down. So if we go up the time frame here, sorry, it's off the top of my head. You can see the trend has been set. We've been in the under half of 70,000. And if we just zoom this in, it's obviously the daily time frame. Oh, sorry, it's 4 hour time. Sorry, daily time frame. And yeah, 70. We were worried about this 80, the 75,000 level, but here we are at 70, and we're in this now into a new sort of range. If we drop into this level, you can see this. This is March through to October. So most of the bulk of 2024, we were in this sort of range here, between 60 and 70,000. That line for the sort of tank. And remember, that was after the blockbuster 1, 2, 3. We're talking about the winter of discontent. So, um, for Bitcoin the year before, and had a nice rally into the year end 2023, and then 2024 we went sideways into the year end. Then we lifted, and then we're in another range here. So it's key level here. That 75 has been breached without hesitation, really. If you can see that there, and let's just put this up to the weekly chart. We'll have a bit more uh, analysis next time. Zoom this up a bit. So there we are. So there's our weekly chart. So it's been a dire 3 weeks, a dire 2026 so far for Bitcoin holders. The 92, the break over that 92 didn't hold at all on that daily basis, and it's been short ever since, really. The close of the week of the 19th, and go back to the daily, stepping down. It's been quite significant. It's a steep fall. The bigger, as we said, we've been saying for a while, the bigger candles are the red negative ones. Sorry, you don't hear. I keep looking up. The red negative ones. Big day, down day yesterday. Big down day today. Obviously, looked like at one point yesterday we were going to hold the 75. See, that was an area, but 70's been moved to within 24 hours. So let's see here. That's the day low yesterday at 73. We had some buyers, but we ended closed the short a lot lower, and then we just slumped again today as the dollar's picking up, and Bitcoin pressured, and many holders correlate this with gold, but gold again has given up. Similarly, has given up $5,000 from a strong day we'd had on Tuesday. The break over 5,000 couldn't be held yesterday for gold. We'll come back to Bitcoin in a minute, but it's the brief break we had over 5,000. The break. We'd had over 5,000 most of yesterday, and then we got to the US Open again as the stock markets rally collapsed, particularly tech stocks. So all the volatile stuff is getting hit. So gold yesterday and this morning hit lows at 4790, and we're continuing to move low. Obviously not quite as low as we got at the beginning of February here. A couple of days, 3 or 4 days ago, but volatility is certainly back with us as we move to the downside. So gold here on the daily time frame, some big candles again, and we need to watch that intraday low that we got to there, that 4,400 level to the downside. So as we talked yesterday about the recovery, next upside was the 61.8 fib. That has been rejected significantly since our last broadcast yesterday, and we closed down back under the 38, having rejected the 50. So the 50, 5,000, it becomes key. It's rejected again today, and now we've gone back under that 38 fib level of that last leg. This last leg down. So the question remains: is this a legitimate Fibonacci retracement? Is this low in at the moment? So still using it, and it's so the 50 played really strong role yesterday and added to shorts today. And again, if you do this, step down the time frames. Not yesterday, yesterday when we were, sorry, where's yesterday? Fourth yesterday. It's 4 hours. Yesterday. So yesterday here we were playing with when I was. Let's go back to the hourly chart. What we talking about yesterday? So yesterday, when I was with you yesterday, it was looking okay at this point. We'd held 5,000, but as we came off, when were we wrong yesterday? 15. Yeah, when we came off after the non-event of the, or not the non-event, but the ADP numbers came disappointing. We had a big down candle as the US market started for 2 o'clock. The first hour of trade was also weak to 4 o'clock into the US, into the London close, and it took us even lower to 4848 on the London close. Rallied into the US close, but then this morning, big down candle here at 2 o'clock, and we've continued to move lower. So here on the hourly chart, the 20-hour moving average provide our resistance again, and down we go. So a break, this rolling top here, moving down. So pivoting now below this 38.2 fib. This fib level isn't quite as significant, but it's still worth having a note. And then 5,500 sits here to the downside. That low we got to at the beginning of European trades on the 2nd of February. So volatility everywhere. Always have your stop losses not too close, not too tight, but get out when it goes against you. So gold lower today. Crypto, just go back to Bitcoin, significantly lower through that significant 70,000 in this hour. Breached it now and moving lower 69,600. So again, where's the next stop? Well, as we saw on the daily time frame, looked like it might have been at 75, but we didn't sniff at it yesterday. We just came crashing through it. So we need to pull further out, and we're now into the top resistance level, which 70,000 was for 2024. So are we going to stall here, or are we going to keep going to the bottom of that 2024 channel at 60,000? The movement down is quite significant. We thought we were going to get buys at 85. Thought we were going to get buys potentially at 80 and 75. That hasn't happened. This is a sell momentum trade to the downside. Momentum's into its overbought zone. If you look at it on the trend following strategies, remember this is a mean reverting one. So we look at the trend following strategies, the crossing. We talked about this earlier in the week. The crossing EMA strategies. We said yesterday we'd been short from the 5th of February here with this strategy. May have got stopped out on some of these retracing, but as you can see there, we already got out there because it's closed above the mid fall in Japan, the mid moving average, but we've immediately gone short again. Also, that's a 5 minute. Uh, sorry, the break of the 20-day moving average here on crypto happened on the 20th of January. It wasn't too much of a worry there because we had this support zone through here at 87,500. The big day was this after this first retrace here from the 28th to the beginning of the end of the month was that 29th, that Thursday when we went down significantly and posted new lows. Certainly for the year and for December as well, and then the follow through candle there on the final day on the Saturday, admittedly on low volume on the 31st of January, and then so it was Sunday, wasn't it? Not the 31st, under 80,000, looked like 70,000, 75,000 would hold, didn't yesterday, smacked right through it, and we're through. Uh, um, um, uh, next time I come back here, that's all. One, two, three. Lock that in. 75, 80s. Oh, look at it. 80,000, and then for the sake of completeness, let's put a 75, 70,000 one on here as well. Next time I come back here, we'll see those levels. So, um, 1, 2, 3. There we are, 70,000 being breached today. Too bad on an end of day basis, but as far as this strategy is concerned, it's been short from the 20th of January. Trend following, trends can run and run, as I'm sure a lot of you are well aware. So, and again, look at the size of the candle. We go with the flow, we go with the trend. We don't try and fight it, don't try and catch a bottom. And the sort of waterfall effect as it's stiffening, and that might be the only area of concern for those that are short, but just stay short. Will we see buying at 70? We shall see. We shall see. I know my colleague and boss was very much about 70 being the target zone from the downside. So will we see some buys? But again, this trend line we drew back at January breached very significantly there on the 20th. So first touch sideways, and then that big day was the 29th, and then the follow through on Saturday and the 31st. So it's Sunday. There we go. Bitcoin week, gold week today. Energy markets, WTI at 64, so it's given back some. We were up on Tuesday, so down Monday, up Tuesday. Again, the weakness was that we didn't go higher. This was tolerated yesterday. It looked like we were pushing higher. We actually pushed higher yesterday, went to 65, 60, but we're down again today. But again, you can see we're holding the 20-day moving average, so the break to the upside is held. We've held 62, which is the key level. Sorry, it's not on this layout. It is on this layout. There we are. That extended fib was hit quite significantly back, and it still remains an upside target 64.60. Went to it yesterday, came back down from it today, but again, that's another fib level from here, but in play. But $64 is where we sit at the moment, and pushing higher. Brent sits at 68.60, so $4.50 diverged between Brent and WTI. That's quite relatively wide, that one, interestingly. Watch that one as well. Following the official inventories or the private inventories in the oil market at the moment, and I'll go on later. But again, you see these remains sort of relatively upside. So indices, say last night, the Nasdaq had a big whack again yesterday, and we're down again today. So 1.5% fall yesterday. So we breached That key, we talked about this a long time, haven't we? We closed right on that 25,000, having got as low as 24,684 yesterday, and here we are, much lower again, and breaking uh, 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 where we were when Trump started speaking when he was in Davos. So that move lower. We're still relatively in our channels, and we compress this in on a daily basis, but that's looking quite weak. See these weak, we bought it back, weak, we bought it back, but the rally was weaker. So there's one, two, three, four, and this is five, and it's still. And again, this is relatively positive, ironically, when we have these sort of parallel decline. So decline, retrace, decline, retrace, decline, retrace. So one, two, three, four, five. One, two, three, four, or A, B, C, D, and see where we go from here. So this isn't actually three short there, isn't it? So if that's one, two, three, from Elliott wave, three needs to be bigger than one and two, so that falls down. So this could be an A, B, C from the rally, the last rally up. So that could be one, two, three. Okay, that. Doesn't actually mean that's one, monster one, two, three. Let's have a look here. So the concern, as I've been saying for a while, is this compression at the top, and uh, we were okay here. As I drew this one before, we were getting sorry, higher lows, so that was still okay. Then we broke through this. We can still see that our lows were still relatively high from here, but this starts to scream again now, the 24,000 level, having breached 25,000. Last time we were bought back within a couple of days. Uh, See what Amazon shares do tonight, but the big sell-off we've seen in the software on Tuesday, the spook to the commodity markets on Friday and Monday, and I say Alphabet were out last night, and Amazon, much maligned Amazon of the big seven, have got their numbers tonight. So will it be enough to turn this around? Doesn't look like at the moment, does it? These are big positive, oh, saying positive, for the trend candles, big bodied here on Tuesday, Wednesday also relatively big, Thursday so quite big. And obviously the concern, as we said at the beginning of last week, was the bounce back that we saw here on the second. Didn't get us back above the opening close there as we started a new month. So and the low was lower than the low of the previous day. So and then we had this engulfing candle on Tuesday, and then we followed through on that. That's the key move here. This engulfing candle on Tuesday, which is followed through. Further selling and a breach of 25,000 is the noise from last night. That's there 1.5% again yesterday. Had the 1.5% we've had plus we've had the day before. So and down again today. Let's stay in the US. The Dow, on the other hand, as we saw, actually increased yesterday. We had a move up 30 industrial companies. The talk of the diversification, the away from the reliance on big software, the big hardware beneficiaries of the AI boom. Um, Still, that mantra's gathering pace. But again, you see that we're still in this compression zone at the top of the range, top of the close to all-time highs. Down a tad today, but we were up yesterday compared to the volatility we'd seen in the Nasdaq. So, so down for today, but still relatively positive and still above its 20-day moving average. Just go back to the Nasdaq. Again, we use the because there's a sorry. This next year the 20-day is there. So we'll take some of these fib levels later. And the most important of all, the S&P 6854 down again today. Down day yesterday, as I said. As the Tuesday big down break um, under the 20-day moving average, and the engulfing was less significant, but it did actually engulf. So it was, was it questionable? Yes, it was. Was the result of yesterday, and that would have added extra shorts because we closed significantly below the 20-day moving average. It wasn't engulfing candle and closed again yesterday, and that explains the gap to the downside for techie traders on the S&P 500. So next test would be the end of day close at 6,800, and whether how significant that level was when Trump started speaking in Davos a couple of weeks ago. We'll say 6,785, but we're currently at 6,854 to the downside. Right, let me just going to flip back to London and see what Andrew Bailey's got to say at, his press conference. Let's see. So, still talking. Actually, there's a guy in London, Jordan Rochester, younger guy. Wash would have lost if he pledged for a Trump here. Walsh would have lost his position. I can't actually mean what that says, but let me see if I can find. See if I can find the press conference. See if there's anything of significance being said. Rubbish pivot reporting on for it tonight. But press conference. Sorry, just bear with me a sec. I can't seem to find. It should have started 10 minutes ago. Politics in the UK. Specialist is breaking news here on the BBC. Specialist US military jets arrived in the Middle East as Iran tensions continue. Starmer under massive political pressure, both from his backbenchers and the opposition over the Epstein situation. So I actually can't find a recording. Anybody running a recording? A press conference, which is unusual. Okay, well, let's just go back to sterling then, see if it's actually while we're on there, let's have a look at it. FTSE. FTSE should have benefited from that. So FTSE's had a nice rally last few days. It's down today. Let's go and see how it's reacted to the news. There's the 12 o'clock, as you'd expect. Sterling weakens. The FTSE rally. They are negatively correlated. So as one goes up, the other one goes down. FTSE's gone up, sterling's gone down because so many of the 100 companies in the FTSE report or have earnings outside of the UK, so that when they report, they need to bring their profits or their losses back. And so weaker sterling helps the companies, many of the companies, 70% of the companies in the FTSE 100. So initially, the FTSE rallied, but it's given up all that gains and we're back. So we went to a day high. Is that a day? It's not, in fact, is it? It's not. Oh, yeah, that was yesterday. It's morning, isn't it? It's a 5 minute chart. So we went not to not pre-market though, pre-market high at 10,400, give or take point or two, but we're now back down to 10,350. So we're giving up that 50 pip, 50 point, I should say, rally. Um, on the FTSE. This is the only reason I don't trade. It's been move around as nice as the DAX. But anyway, so the FTSE is back to where it was pre announcement, and it may be that he has said something, but I can't see anybody reporting um, what uh, Bailey is saying. Let me just double check that where are we? Let's double check that there is not. Um, that he's actually. I'm sure there was a press conference. It wasn't last time, was there? Last time the bank vending met, there wasn't a press conference. Policy statement. Bank barely speaks. Did speak at the Bank of England press conference. We don't get into it here. No, it's not. There's usually something running on Bank of England website, but there's nothing. You know, report of the meeting publication news. Was it me just being stupid? Which isn't unusual. Anyway, I can't find it. But as you can see, the initial rally's gone. So has the sterling for the weakness in sterling been what? It says disinflation. I've got a new squawk here. Oh, here we are. I found the new YouTube channel. I can't find it now. No, no way. Anyway, got the deputy governor speaking. Yeah, sorry, that was my fault. Okay, right, guys, I'm going to pause this now and come back for the ECB decision, and I'll just leave the sterling rates on. So our this smidge, there we are. So we're out of the money. I'll stop out that now. It looks like we were continuing lower. We did all right for a little bit, 5-10 minutes. Got within a smidge of our target zone. We did get to the bottom of the Bollinger Band, so I may have taken it out. But here on this strategy, that's now crossed this short term. It's the risk of trading the news. So it would have closed out there. So we've gone flat. See how what's happening? It's crossed us out. Our target was here, our stop loss was here, but we've closed out because it's gone long here now. That short is closed out flat, and that's now gone long. Our first target, our stop loss is down here now. Target, our first target is there. So we'll pick that. So that long, sorry, the short didn't work out. The long, half of the position. Again, this you can code all this. It's very, very easy with this. So that's hit target one, probably target two. Will we get back to 136? We'll see. But that's triggered that. That would close half the position. That then brings the stop loss up here on the short-term basis to entry. Actually, let's leave it there because we could retrace a wee bit for now, and then on that camera complete. So we'll come back. I'm going to leave this for now, and I'll be back for the bank of sorry, the ECB announcement in 30 minutes. So at 12. Let's bring this up for you. So I'll be back for the ECB press conference. in about 10 minutes at the top of the hour ahead of the ECB announcement at quarter past. Okay, so I will see you shortly, my friends. Whether we actually get to see what's going on in the ECB, like we haven't heard from London, as far as that information concerned, we shall see. So, yeah, um, barely speaking at the moment. Um, ADP is a big thing. So I will be back presently. Okay, so see you soon. So see you soon. Hi, Ron. I don't know if anybody's here again or stayed around. I've just been a break to eat, and we're back. ECB announcement just coming in across the screens at the moment. This is the 5 minute. That's the Eurocad chart. I don't know why it's Eurocad. Dollar would make more sense, wouldn't it? There we are. We've been ticking higher. For the last hour or so. This morning's low at 9:55 here, 10 o'clock, 117.80, and we've been back 20 pips, just 20 pips higher ahead of the ECB to 118. That seems to be our bit of resistance, as you might expect. Let's have a look what they've got to say over in Frankfurt. So, as expected, no change from the ECB. Their deposit rate remains at 2%. So the main financing rate left at 2.15 and marginal lending facility at 2.124. And so no difference there. Absolutely nailed on. No change from the market. So there's nothing there. And again, maybe some easing by the year end, but there may come pressure. Sorry, you're down here. I keep looking at the cameras up there. Maybe some pressure for the ECB to potentially actually join the RBA and start raising rates this year. But at the moment, the way the money markets are reacting, it looks like about 5 or 6 basis points of easing, possibly by year end, is still in there at the moment, but nothing really moving the markets on that. Economy, let's just read the highlights like we did with the Bank of England earlier. Sorry, you're here, aren't you? Economy remains resilient in a challenging global environment. Low unemployment, solid private sector balance sheets, and gradual rollout of public spending, particularly around defence and infrastructure, which we saw since that big move in fiscal move in Germany, and supportive effects of past interest rate cuts are underpinning growth. At the same time, outlook remains uncertain, still owing to ongoing global trade policy uncertainty and geopolitical tension. So, a clear statement there, which we didn't see out of London from the Bank of England about trade policy, and they're talking about. Let me just reread that again. Particularly ongoing global trade policy uncertainty and global geopolitical tensions. Governing Council is determined to ensure that inflation stabilises at its 2% target. That's exactly what the Bank of England said in the medium term. It will follow a data-dependent phrase. Wasn't used by the Bank of England earlier, but Miss Lagarde likes it in particular. Meeting by meeting approach. Again, that's a Miss Lagarde ism as well, not the only one in central bank world, but determining the appropriate monetary policy stance. In particular, the Governing Council's interest rate decisions will be based on its assessment of the inflation outlook and the risks surrounding that in light of the incoming economic and financial data, as well as the dynamics of underlying inflation and the strength of monetary policy transmission, which we're into. The Governing Council is not pre-committing to a particular rate path. No change to the statement as the ECB maintains its data-dependent meeting-by-meeting approach. So absolutely non-event. We didn't get the breakdown in the voting, so it looks like the Bank of England are going ahead. Probably March with a rate cut. Euro, no change, absolutely nailed on. So the biggest move we've seen this morning is actually euro pound, and that will have been compounded by the Bank of England here this at 12 o'clock. As we saw, we rallied to 87, but we've just slipped about 13 points here. There's not much here on the euro pound move, but down a bit on that. No actual, not even a blip. Here we are. That's 5 minute chart. This 13.15 is when the data's come out, and absolutely no move there in euro. Pound, euro, sterling. The euro dollar pair has sort of bounced back towards to test the 118 level as the announcements come out, but nothing. Everything. There's nothing in there at all. I say we had the excitement of the surprise in the rate in the voting intentions of the actual votes from 4 members of the. It was actually the 2 members that caused the surprise over in London, but nothing out of Frankfurt so exciting. So can't imagine Miss Lagarde's press conference being particularly exciting. Nothing's changed. here. Let me just have a look at the full statement, which is just I've just got through here. Yeah, it's data dependent, meeting by meeting is the thing. 2% inflation in the long term. We look at that. Again, Mr. Girl's going to read all this. Assessment program, APP, APPMP PEC portfolio declining as a measured and predictable pace. It's nothing. There's nothing new there. Transition policy. So right, it's going to be one of Mr. Gard's more quiet press conferences, unless she gets asked about some political issues, which she won't get pulled on. But so deposit review, deposit facility remains at 2%. That should be in the calendar. The main finance rate 2.5%. 2.15%. Here we are, 2.15% for the main refinancing rates at 2% and 2.4% for the financing rate. There we are. So we've also apparently got these in claims are due in 5 minutes, so it's obviously a bigger impact. The unemployment claims, which is normally our point of contact, isn't it? Oh, you keep getting in the wrong place. Is normally our point of contact for Thursday's live event, but that's still 7 minutes away. So we'll have a look at how that moves things afterwards. So let's just take that away and let's have a look at the markets again. We had a quick look. Again, this isn't really down. So Europe very much unmoved. The higher time frame remains stronger dollar. So euro's been ticking down. It's under half of the Bollinger Band. As I said yesterday, is 118 going to become last year's 117, where the euro dollar rates continue to pivot around it. So we've had this move up and then back down. So we had this move up for the dollar at the beginning of sorry. So with that strong move, that 3-week move for the dollar, the euro went down to 170, 116. Euro then went right to 120 here towards the end of January, and then the dollar's come back in the last week or so back to 116. So that previous 118, not 16, sorry, 118. So that previous resistance level is now, what is this going to be our support and our pivot through area? Lots of volatility recently, but the expected weakness in the dollar has turned around in this week. Obviously, the appointment of Walsh moved that, or the expected appointment of Walsh moved that forward, but obviously the volatility we're seeing in stock markets has been a follow through on the dollar. So dollars bid this week, and we currently hold the 118 area. So are we going to continue to pivot through that range here on euro dollar going forward? Elsewhere, euro yen 185. So dollar euro back up against the weaker yen this week. 185 breached yesterday, and we're back at that today. Top line of the Bollinger Bands there sits at 185.75, and that closing high from the end of January took us to 186 as well. So that's moving back up and then the other half of the Bollinger Band again now. All ahead of Japan's elections, the lower house of parliament elections on Sunday. Aussie Euro Oz been a strong move for the Australian dollar, and that's holding. We bounced a bit in the last couple of days, but Tuesday we went down to 167.60, and we're back to 169 at the moment. But that trend is very much to the downside. Euro Oz. So Euro. Very little moves on the ECB decision. Again, what Miss Lagarde may have to say in half an hour's time. But let's have a look how that may have infected the European stock exchange, particularly the DAX. So the DAX is following the American stock market's down this week. Big down day so far, 24,400 here on my derivatives platform, back to where Trump was speaking line, 24,350. So down day yesterday, not significant as the Nasdaq. Uh, More in line with the S&P, the DAX. Yeah, obviously it closed earlier ahead of the US markets, but opened lower this morning. That's the key thing. You know, the gap from yesterday's close. We go to the hourly chart today. Um, Opened lower this morning and has continued in the half the Bollinger Band for most of the morning. We had an opening as the 8 o'clock hourly candle on the DAX this morning on the cash open. We'd rallied a wee bit in the Asian session, but those lows from yesterday taken out and down we go into 24,350. And again, these are hourly candles. So there's a little cluster here where Trump was speaking here. There's 24,350, and then the recent low has taken us to 24,200. Um, so downward pressure remains on the DAX this week, and there's the big daily support at 24,000. So we've got the time frames uh, popped up, popped back down here on the 4 hour intra-day spike on open on earlier this week on the 3rd. We went to 25,100, so we held 25,000 for a little while. Didn't last very long, and down we've been ever since. So down, retrace, down again, consolidation at this 24,600 level, and then two legs down so far today. And there's the next level, and see in the 4 hour, 24,286. Trump was speaking, and down the DAX was at 24,350. So that's that's a lie, but it was that low there from the 21st of January. DAX to the downside. Let's just clip right into the 5 minutes. See how it's reacted to the ECB. Absolutely no move whatsoever. Let's just bring that up. Nice. Little bit of a bounce again using this strategy. Touching the outside of the Bollinger Band was here. We crossed. Actually, that was a continue. So that was touched. Well, we're looking to go short here. So that would have, you'd have, that would have been. That's touched there. So that's gone up. That's gone. Wait. That's the first touch there at 11.5. Then it crosses. So that's gone up to touch. So we're looking to go short. That would have been confirmed just about on that candle there. So you'd have got in there at 11.50, but then we crossed back up here. So I would have, well, again, whether you'd had the stop loss there or on follow the rules on the cross of that or not, because you would have already, interesting there, you'd already spiked target one. So you might have panicked out. That's the move. That's the key one there. As we've gone down here, and then we've got the cross of the MACD. So that would have been your better entry on this one. I don't know what's going to go on after that. But that would have been your better entry, or you could have waited, obviously, with the breach of the 20 period. You got target one there, and then just trail that down, and then it's the cross here and got out there. So nice move ahead of the ECB on the DAX to the downside, and now we've got a marginal long here, stop loss here, entry here. It's come back, still moving up, but it would have stopped us out if I'd kept our stop loss here. So it's just taken us out in the last 2 minutes. So that's a non-mover, a flat trade, but that was a nice winner from here. I mean, again, to be honest, we probably waited for that one and then trailed that down there and then got out there. So got out there as it's crossed, or confirmation crossed there to go long. So you'd have closed your shoes. So you'd have got, again, So let me just do this for everybody. So you'd have got in there, your stop loss would have been up there somewhere. And trailed it down as we've gone down. So we wouldn't have set a target, we'd have just, I might have had Trump speaking as a target, but the strategy would have moved down. So we'd have moved our stop loss down as price has moved down, price has moved down here, next one down there. A big move down there. We'd probably still had a stop loss there. That moved down there, stop loss here. So we'd have either been taken out as it's turned if we got it too tight, which you can see by at this point we're still going down. Then we haven't moved our stop loss, but we've got a cross on uh, the K and the D line was stochastic, so we could have closed that out more aggressively there. So the aggressive move, and that probably, having done this all morning, I'd have bagged that and certainly taken that out on that touch there. But the confirmation cross would have been a bit later. So again, on a conservative way, we would have got in here and got out here and also gone long here, which is then turned around and stopped us out. Well, if we'd got in here, our stop loss would have been here actually. So yeah, that's just been stopped out if we'd had it below these candles here. This has been stopped out. So the long didn't work. The short certainly bagged plenty of pips. So from 541 all the way down to 5410. So is that right? No, 5410. The big line, isn't it? So 40 points there on the DAX this morning ahead of the ECB. Trying to rally. It's not happening here on the 5-minute time frame. So wait for the next movement. If we go back up, no, you can see the continuation trend with the stochastics as we start to rise. So stopped out on that spike, but perhaps looking to get in on this candle here. That re-entry. There's a continuation trade with a target back to here. That's the more aggressive stance. So that's the more, just follow the rules. This is the continuation trade of this, because the stochastic line's still moving to the upside. So anyway, there we go. That's how to trade that. This crossing moving out. This Bollinger Band is stochastic setup. If you're a trend following trader on this one, let's have a quick look. This will still be short. So the crossing moving average strategy, or on the 5. What's the daily? Compare it to what we were doing. So that would have been short this morning at 12:15, all the way down and got out there. It's touched that, so that's out. And again, it's rejected that. Certainly hasn't gone anywhere near the 20. So you might have looked to go short again here. The test of the first test of the low of the day ahead of the ECB was now reversed back to the other side. So that's waiting. That's still short on the 5-minute, or you're either out or you've been in a continuation trade, which may have stopped you out. We may be looking to stop out. So we get back over this level there. Okay, so anyway, that's still short. So while we're doing this, let's have a quick look at the VWAP. What VWAP's doing? So big down trend, big positive negative candle if you like. There's no upper wick here on the daily today. Can't read that though. Lots of volatility yesterday. We'd had an update on Tuesday, but the trend remains down. We're under the VWAP there on the hourly basis. So it's hourly basis. That was daily. Sorry. Back to 5 minutes. So again, either there at 7. There you go. You see that? Hang on. This is US time, isn't it? So this is 7 plus 5. That's 12:15. Same time frame there. Or you could have waited for that, and 5 minutes later, the strong candle. Remember, no upper wick. It's just and body candle is body candle body. We're looking for strong 5-minute trend to the downside. So nothing happened here. Lots of wicks, lots of reaction and rejection of 24,600. You see here the wicks rejecting. So we got balanced doji candles here. Activity that's suggesting possibly a short. Certainly no longer long from here. we've got in long here, and that was still green, but out there, and confirmation of a short here, but you would have got the way the Heiken-Ashi candles, what you would have got in down here somewhere, in or down here somewhere, but it's still certainly some money in the bank, and then out as that's gone green ahead of the ECB at 2 o'clock. Remember, this is New York time, because this is 8:34. Yeah, it's New York time. So it's 8:35, and yeah, it's 5 hours behind us. For some reason, this feed is also where that feed comes from the Heiken-Ashi. So anyway, the VWAP. So very negative, and trend to the downside on the DAX with that setup. So there we are. Let's just have a quick rerun through where everything is sitting post ECB, and I'm going to go off and listen to Miss Lagarde because I've been here since 12 o'clock, and it's now 1:30. And this record's getting a little bit leggy, and nobody's going to watch it. So let's quick back run through where everything sits at the moment. So gold back to 4,860. Today the trend remains to the downside. And the little charts, we're drifting lower. Resistance to the upside today sits at 4,907. And as we were talking earlier about this fib level, this big shakeout, we're pivoting through a key level. It's not the key level, but we rejected the 50% yesterday, and the 38.2 is where we're trading around at the moment. But we're in the lower half of the Bollinger Band and have been since yesterday afternoon, and we continue to track lower on gold. Bitcoin, as I said earlier, under that key 70,000, we're still at 69,400. So there's the first hour that's now completed, and our second hour under 70,000 starts at the low of the day, or just shy of the low of the day. Currently, the low of the day is 69 and 50. So the trend again, as it has been for a while, to the downside for Bitcoin. The euro on the back of the ECB and all the weekly claims are out as well, aren't there? Has ticked up in the last 3 or 4 hours. So we got a low of the day this morning at 117.80. We got back to 18 and we've reached 18. So the euro is actually that might have been a bit. It's got a bit stretched. That's obviously on the unemployment numbers. So we've been long here. Another cross there. Bit weird, but it's trending. The trend is overridden the mean reverting strategy there on the euro. So euro 118.18. I'm guessing it's to do with the news of the weekly claim. So let's just have a look what that's come in at 231. So quite significantly high. That's a again suggesting weakness in the discontinued weakness in the jobs market, but it's historically it's very, very good. Still a tight jobs market, but it's quite a significant jump, a 20,000 jump. Last week wasn't revised anywhere, but that's if you look at the weekly numbers, that's the highest we've seen since the 18th of the 11th of December. So it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 week high, and we're back to the 230 level. Are we going to go back to this 240 area, which was had been peaks, but it's still a very, very robust jobs market, I would argue, on these pure numbers terms. But that's quite a big variance on that. It could be to do with the messiness of the counting. So remember, we've got no non-farm payroll tomorrow because of the government shutdown at the weekend, on Friday at the weekend. So that's been cancelled. Probably next Friday, as far as we can see on here, there's nothing actually come back to the Forex Factory calendar. That's the best of the calendars we have. But jobs. JOLTS numbers, see what that looks like. That is coming out. It was delayed from 2 days ago. So watch that later on as well. As US trading gets underway in about 50 minutes' time at 2:30 my time for the cash session. So that's moved the dollar, as we just saw. Uh, Claims coming in hotter than expected. 231,000 continuing claims were also hotter than expected. So the dollars weakened again on that. But it's still, we spiked on the data. And then we went high at 118.80, but we're still over 118 as the key thing was 30 minutes or so. So the dollar a bit weaker on that jobs numbers and see what the jobs brings later. Let's have a look where sterling's gone to now. Post the Bank of England and the press conference are now finished as well. Yeah. So sterling has the big move down on the announcement. Is the low, we've got that short, we've got that long, target one now. And uh, so stop loss. Anyway, so successful move. And we got target one and target two. That's target two, the other half. So that's out and closed. And now we've crossed to go short. So that's actually really triggered short again now. So we've got a successful long then short. So now that's short now again. So we go purple for go at this point now. Stop loss above where we've been, shy 126 still, and target, well, at least there to start off with. We'll see how we go. But we'll see if this tips down and then perhaps to the other side of the Bollinger Band. That's the way to trade with this strategy. So there we go. Quite a very, the big data of the day is out. We have no particular. So, the big surprise of the day was that was the vote from the vote split from the Bank of England, the 4-5 votes that we got. Um, from the Bank of England, which close that now. This is the only major surprise from the two European or the two central banks here in Europe was this split in the vote in London. 5-4, four of them wanting a 25 basis point cut. Consensus of the nine was that we stay at 375 here in the UK, and Bailey was not the swing vote, but he obviously, as governor, has a deciding vote if he needs it. He didn't put it last time he was called to do it, but he's erring on rate cuts to come. So sterling weakened, then came and actually give it all back actually. So it's back to where it was. So with some of the weaker outlook measures, the idea of inflation still potentially hanging around, but still away from that its 2% target at 3.4, 3.8% range on the measures of the inflation in the UK. So that's remained the case. Now, likelihood of a March cut, not next month. Sorry, next month at the March and February already. Have raised its head, if not April, from Bank of England, but still sitting at the top of the major industrialised countries in interest rates. Nothing at all really to report from Frankfurt unless Miss Lagarde gets something that she doesn't deal with at the press conference, which is very unlike her, but still talking about data dependency. It's a meeting by meeting approach, about a 5-click potential further cuts from the ECB, but more, I could imagine if this recovery continues, more of a chatter about possibly hikes rather than cuts here in Europe as well. But that's probably a bit ahead of ourselves at the moment. So lots of news today, and they were the two big events. Unemployment in the US claims, people claiming unemployment for the first time, came in at 231,000, 20,000 higher than expected. Obviously, that big cold snap has been captured in this reporting. So that could be just seasonally adjusted as well. I haven't seen any comments about that. So and that again, the trend is still a very tight jobs market that's imbalanced in the US. So weak demand for labour and a weak supply market as well. So still remains relatively well balanced. So, Miss Lagarde to come in. She's about to speak. I'm going to go and listen to her. And in an hour or so, we have the jobs openings and the churn rate, which was delayed for 2 days, as I said earlier. Head of the Bank of Canada and the head of the RBA, the Australian Central Bank, both speaking later on tonight as well. So watch that. And tomorrow morning, Trump's got a speech scheduled more early doors in Washington, unless it's late tonight. Yeah, so yeah, we'll see. So take care, everyone. I'll see you tomorrow at 1:15 my time, 13:15. And I say I'll leave you with stocks weaker, the dollar a bit weaker, and gold in the downtrend, and Bitcoin under 70,000 for the first time in a long time. So be good, be safe, always watch your risk management, my friends, and may the pips and the points